My name is Damali Ssali and I welcome you to this episode of the Ideation Corner. The Ideation Corner is a space where ideas are discussed and dissected, and today I host Wendy Nanfo. Wendy is the Country Operations Coordinator for Jumo, which is a financial technology company. Jumo partners with companies to provide savings, lending, and insurance products to entrepreneurs who are based in emerging economies such as Uganda. And anyone with a mobile phone can access their products. Jumo, since launching in 2015, has served over 16 million customers in Africa and in Asia. In Africa, they are based in Uganda, Tanzania, Kenya, Zambia, and Ghana, while in Asia, they are based in Pakistan. This makes Jumo the largest financial technology company on the African continent. 60% of the customers who access Jumo's products are medium, small, and micro-sized enterprises. And today I'm very happy to have Wendy, who is going to speak to us more about Jumo. Wendy.
Thank you, Damali.
And thank you for agreeing to speak to me today.
Very delighted.
All right. So before the 40 Days for the FinTechs initiative, I had never heard of Jumo. And Jumo being the largest financial technology company on the African continent, I was surprised that I have never heard of your products. And yet it appears that your products are actually impacting quite a lot. So can you tell me a little bit more about Jumo, especially for the benefit of those who have never heard of Jumo?
So from what you actually said on the company profile, Jumo is a full technology stack for building and providing financial services. So technically what we do is use data science and machine learning to be able to create a financial infrastructure. And from some of the stack that we use an advanced data engine that organizes the data. And then we also use some of end-to-end banking technology. We also use a flexible platform to be able to provide these products. So if those three things are put together, we are able to provide a very lean banking technology that provides financial services at a very minimal cost, or at least lesser than at least a fraction of what the bank charges to different customers. So if we look at some of the products and services Jumo has provided, for example, in Uganda, we have the WEWOLE product, and we partner with Airtel on the Airtel Money platform to be able to produce this product. I'm pretty sure you've heard at least of WEWOLE.
Yes, I have heard of WEWOLE, definitely.
Yes. So with WEWOLE, what we do, we partner with banks or MNOs, the mobile network operators, to be able to provide these products, and this can include savings, lending, and insurance products. In Uganda particularly, we're doing a lending product. We do partner with banks to provide the finances, and with the mobile network operators to provide the customers, because they have a very big reach. For example, in Uganda, we have about 28 million subscribers on mobile money. So it's already a really big reach. Like, we have people actually using phones, and that's where we can be able to use that channel to reach them. So our wallet product is accessible via USSD. Someone just has to dial *185# and be able to access the product when they qualify. We give them the money. We disperse that loan onto their mobile money wallet or account, and after that, the WEWOLE product that we are offering we offer a loan starting from, let's say, 1,500 going to 800,000. It's progressive, so you might start small, but it keeps going on as the product keeps growing.
That's less than $1. You start off with something less than $1.
Yes, less than $1, but something that ends up going to about 800,000 USD, or 800,000 Ugandan shillings. Okay. So with loan terms of 7, 14, 30 days, but now because of the pandemic, we do understand that our customers were definitely having trouble in repaying these loans, and we extended our loan term to 30 and 60 days to enable them or have that flexibility and confidence and comfort on paying that loan as when they can actually be able to pay it. The cost of the loan is very affordable to a customer. So it's definitely cheaper than when I go to a bank to ask for a loan, and probably a bank will not give you a loan.
Your customers, I don't think, will be accessing such a loan bank.
Exactly.
I don't think they meet the criteria.
Exactly. And also with this loan, they're not secured. You don't need any collateral or paperwork. No one is going to ask you for your ID or anything. You, as let's say Damali, you can just get your phone and do it in private. And people don't want to talk about their finances. I don't want to take out a loan from a bank and come and go like, hey, I took out a loan. It's going to be more like, it's a private thing. If I asked you, for example, how much money do you have on your account?
I won't tell you.
Exactly. So that privacy where someone just uses their phone when they need the money and it's able to be accessed, it's been very important for our clientele. And then after that, the repayment comes in. Someone can choose to pay either before or on the due date. The repayment for our WEWOLE product here is manual. So someone has to dial the *15# again. We remind them, of course, during the journey that this is when your loan is due. So then they actually pay back.
Also, you're not like these, because I've accessed other products where on mobile money where you borrow, and then as soon as you get money, if someone else sends you money, they take the cash off. In fact, you don't even access it. And it could be that I'm not ready to pay at that point. Maybe I have some other thing to do. Your product doesn't do that?
No, we don't do that. So the customer pays out of their own will. And let's say, for example, you received money. The people we're serving don't have a lot of, let's say, disposable income on them all the time. Someone makes a bit of money, they're paid, they probably are in an emergency and already took out a loan from us. It's due, they don't have money. I send you money and it's taken away. What am I going to do as the person who's been waiting to take, let's say, a child in hospital, to pay tuition for my child, or to add some little capital in my business? What am I going to do? So it's a bit of an interference, but then we give you the authority to pay back. And we have actually seen that it works, because what our customers do at that point is we remind them that you need to pay back your loan. They pay back the loan, and we've seen our collections going to almost 90% plus on like a collection rate. Sorry,
that is higher than the banks get with the formal lending. That's way higher.
So like people pay back. So people do pay back the loans, which is quite good.
Of course, because you make more money then that way when they pay back. But I think maybe what I'm taking from this is the responsible lending. Maybe that explains why you don't necessarily advertise your product.
Yes, that is very true. We don't advertise our products because we use data to score these customers. The data that we have is what we can be able to create a scorecard or play around with, if technically. So if I don't have data, let's say your personal data, let's say from like Airtel, how will I be able to score you? But how will I be able to tell another person that you are not able to qualify because you don't have data? So there's all that. I don't want to call it hindrance, but there's all that communication where someone tells another person that you can qualify, and that's so you can't qualify, and that's okay. But then if it's all out there for everyone to see that yes, there's this product, but I can't get. Yeah. It's like telling you, hey, here's it's like swinging the ball in your face.
But you can't access it.
There's money, but you can't access it. And so, but then it really gets back to also responsible lending. We don't want to make people who actually don't need to get money want to get money, because if you qualify as the money, but you don't need to get money to go buy something, why would you then get that money? But if I tell you, hey, there's 50,000 for you there. You don't need it,
but I'll get it.
Like, okay, I'll take it. So we try to just give the people that we think at that point qualify. And throughout our journey, we customize our customer journeys for a particular customer. We customize it for you. So you might qualify for this amount of money. I might qualify for a different amount of money, depending on what our data says, of course. And with that, we are able to say, okay, every time we offer Damali 20,000 shillings, between, let's say, 1,500 and 20,000, she takes out 20.
She takes the maximum.
Yeah, when we offer her 50,
she'll take the 50.
The 50. When we offer 70, she takes the 70. So with that kind of behavior, we're like, okay, is it that we're giving Damali very little money?
Or
is it enough? Is it should we educate Damali? And that's where the financial literacy comes in, because we need to let you know that, hey, we're giving you this money because yes, your data says you qualify for this amount of money. However, please,
do you need it?
Borrow responsibly. Take it for what you need it for. Like, if you give you 70 but you needed something for 50, take the 50. Don't indebt yourself. So that kind of education, and you see that when customers, their loan amounts keep growing, we realize that they actually understand how the product works. You actually see people, you offer them a bigger amount of money, but they'll take what they can actually afford. That
financial literacy, is that also a service that you do provide to your customers? You actually educate them about?
So it's not a service. We do it as part of the product, to be able to understand better our customers. We know that there's, in the markets that we serve, they don't know these things.
Yeah, of course.
So for our product to be able to work well, and for us to understand even our customers better, we teach them. We teach them that this is how we do things, because no one else has taught them this kind of thing. So it just helps the education. Of course, after they are aware of what, how they should manage their finances, what they should do, it increases our repayment.
Okay.
Rate.
Oh yeah. Okay.
Yeah.
You're doing it for the repayments, which is a good thing. We were talking earlier, and you walked me through this journey, because I'm a bit ignorant of your products. So you walked me through this journey where, first of all, you rely on the, say for example in Uganda, the Airtel data, which will tell you, okay, Damali is a customer, and she's been a customer for 3 months, and these are her mobile money transactions, and this is her profile, and therefore she qualifies, and then she qualifies to the next, to the next, to the next. Walk us through that journey.
So when we get the data, we score it, and after that we'll let Damali know, hey, you qualify for this amount of money, X amount of money for a WEWOLE loan.
And you're doing that through Damali's mobile phone. She gets a message.
Yes, so we get a message on your number. We send you a message on the number. At that point, you dial *185# hash, press option 8 for WEWOLE, and that you be able to accept the terms and condition, opt in, and then you'll be able to actually type in the amount of money that you want.
And it's instant. I get it instantly.
We immediately deposit that money in less than a minute on your account, on your money account. And from, you can always withdraw it. You can always, pay for a service through the mobile money with the different services we can now pay on the platform. Yeah.
And then how do I get to the next level? Because you told me about 7 levels.
So now what happens after that, after you finish taking out a loan, of course you use the money for whatever you're using it, and then we have in-loan messages that we keep sending to our customers, just like a reminder of, this is this you're going to be paying back in a week's time, or you're going to be doing this, or borrow responsibly, like different marketing messages that just kind of encourage the customer to know what to do. And after that, then we go to the repayment. So if they pay back on the due date, that's good. They can be able to qualify for another loan. If they are late, and of course due to different circumstances, no, I don't think anybody just intends to just not want to pay, then we charge them a 10% penalty. So let's say if it's 7 days, we still give your customer a grace period and say, you know what, probably there's something, they just didn't get the money. So we try to be, even though we're using technology, we try to be as human, because these products that we are giving out or delivering are for human beings. So things can happen, things can change. So we give them a grace period of about 2 days, and then we put the 10% penalty fee. And then after that, when they pay it back eventually, then they can be able to qualify for another loan. Depending on
you don't disqualify them never to access your loans ever again?
No,
okay.
No, we don't disqualify them. They can be able to qualify again next time. Maybe not immediately if they try again. Or it might affect the loan amount you get the next time, because the thing is with the data and the kind of data that we use, it will say, okay, we gave you 20,000 last time, you had a problem paying it back.
That's like $4 or $5.
Yeah. What was the problem? Was it that
do you speak to the customer then? Do you get to understand from the customer?
We get as much insights from the customer as we can, because it's the only way you can be able to provide a product like that. We need to be as close to the customer as possible, and that goes across all the business functions. So at that point, we know someone was not able to pay back because of ABC. If it's something that maybe we gave them a bigger loan that they could afford, then maybe should we give them a smaller loan next time? So your loan amount might go a bit down, but then it doesn't stop you from progressing. So it all depends on how you use the mobile money services. Again, the data from, let's say, Airtel, but also how you repay, your repayment history, your repayment behavior. So it doesn't mean if you're late on loan number 2, you're gonna. It doesn't mean you won't ever.
You're blacklisted.
No. we try to.
Okay, that's good to know.
We're trying to move financial inclusion as much as possible. So if it's about blacklisting, then I mean, what's the point? Yeah, what's the point?
So okay, hypothetically, I'm a wonderful, repayment person, and you gave me loan 1, and I repaid back on time. You started with the $1, and then we go up to $5. Payment 2, and I pay on time. Then I move to the next level, which increases my amounts. So what happens to the topmost level, your prime customers who have been repaying all their money on time?
So being a new product, and with the technology, it's always emerging. Things always come up. We don't stop thinking. We're always going like, what is best for our customers? So let's say you hit the 800,000 point. What are we going to do for you?
That's like $250.
Yes, what are we going to do for you? And we find that in other markets we've thought of, we've actually implemented installment loans. So what we were talking about is an access loan that is here and also in other markets. So we end up introducing installment loans. So we're thinking, okay, so Damali has been a very good customer, has been able to pay back until 800,000. We have noticed that there's a particular trend at when Damali is taking out this 800,000. What should we do next for her? How better can we serve them? Is it enough? Is it working out? What are the terms she's paying it at? And with that information all put together, we say what other product can be best suitable for you. And then it comes back to the point, know who you're serving. So we're like, okay, maybe we should try giving Damali 2 million shillings. It's in 3 months' time, she's taken out a loan of, let's say, 800, let's give Damali the whole total or slightly less and give her three months of repayment.
So it's the same amount or less, but in a longer repayment period.
Yeah, but probably you've been taking it out on that particular, like pay back, take out, pay back. That means maybe you're doing something that you need more money at the same time. So you want to empower, let's say if people usually need like a lot of capital to start businesses and stuff like that. So we try it and say, and we do this prototype test and ask our customers, how better can we serve you? So we will look at a certain set of customers depending on, of course, different variables, and we'll ask you, how better can we serve you? We do focus groups, we do EPS surveys.
What are those?
So these are surveys, just like we send you like a message and ask what you think about the product. How better can we serve you? And we do this twice a year. So, and that's where we actually get that whole idea where customers are saying, please give me more money and more time. And we look at all that data, we see if it makes sense, and then we actually provide a product with a test, and then we can roll it out. So installment loans will go for 60 and 90 days. Of course, with different repayment dynamics, you can automatic deduction of money, like on the particular installment date as agreed with the customer, and yeah.
Okay. So from what I'm hearing, okay, there's a lot of financial inclusion. You're partnering with currently Airtel Money for Uganda, but what happens to the other customers who still need financial inclusion, but they're on a different network?
Yeah, that's a challenge, and if in reference to the 40 fintechs panel discussion that we had, it's something that I think only interoperability would be able to resolve, because if I'm only using one data stream, that means it's already limiting. And if we had an alternative source of data, let's say I can plug in whatever you're registered with one network, or you're registered with what bank, but as long as I can be able to get some information about you, I should be able to design something for you. So that's why I thought that interoperability would be a game changer, because we can tap into that and provide a product for the other people. But before we go that far, we're actually looking to launch a product with MTN.
Ah, nice.
Yes.
Yay.
So
because I'm on MTN, maybe I could become your client.
You should.
All right. Would it be the same type? It's a WEWOLE type where, probably a different name, but anyway, it will be designed the same way to get to people who currently cannot have actually a bank loan.
Yes. The kind of clientele we're reaching out to is definitely that. Like as mentioned earlier, 28 million subscribers. These are between Airtel and MTN. So if we've reached a certain segment of that 28 million, we want to reach out to the rest of the people who, and we know how Uganda is. Most of the people are unbanked or are not using any kind of formal finance or don't even have access to it. And with that being known, we need to find a way. And if mobile money has created that way for us to reach these customers, if that's the only form of finance they have access to, then we need to use that channel. We need to exhaust all the different channels that there is, and the ones that will come in the future will definitely come up with a way to exhaust those to be able to provide to improve financial inclusion.
Okay. So I can see. Sorry, go on. Did I interrupt you?
No. I was just thinking. Quite impressive what I think MNOs have done. I don't know if you've had the mobile network operators.
Yes.
I'm quite impressed with that. What they've done to take on the concept of tiered KYC. So,
what is that?
Tiered KYC is just using the most minimal kind of documentation to be able to put someone onto a platform. So when you look at making the national ID here as the formal form of identification, you're
cutting people out.
No, yeah. we are including them because now everyone has an ID. Most people, you cannot do anything in Uganda without a national ID. You can't open up a bank account. You can't withdraw money somewhere on a different. Anything you're registering for, you're buying land. Anything you're registering for, even at minimal costs, as long as you need to be a part of that, you need a national ID, and it's the only one requirement that mobile money needs, or to get a SIM card. And the moment you get a SIM card, you already have an account, a mobile money account. And it's that easy. So I feel like it's important because that's already, even if you're not taking out a loan yet, you already have access to a certain kind of savings, at least transactional account that is in your name. Yes. And for a company like Jumo,
you rely on that.
We already have data on you. We can be able to design something for you.
Okay. So now I can see you partnered quite a lot with the mobile networks, which you're very happy about, clearly, because you get access to all these customers instantly, and you're able to use the data actually to your advantage to then include them. But have you thought about partnering with banks, say Stanbic Bank, and to get your customer to the next level, your prime customer who's come from borrowing $1 to $20 to $250, which is the maximum that you get, $250, which is about $800,000. How do you get that customer to the next point? How do you connect now the customer to the banking sector, which is very risk averse, but we need that because we know the banking sector cuts out the informal sector quite a lot. So how do you narrow that gap?
That is something we already do in other countries, partnering with banks, and we cannot provide the products that we provide without partnerships. So I know banks have been very skeptical with this particular class of clientele because of the normal traditional banking methods or ideologies. So what we do is, let's say in Zambia, Ghana, we're already partnering with banks like ABSA. We've partnered with Let's Sugar. We've also partnered with EcoBank to be able to actually give loans to these people. And what Jumo does is we improve the efficiencies of cost and operation. So in the already existing financial services in the particular ecosystem. So with this particular model, we have been able to reduce the cost of reaching the unbanked customer by 10%. Ideally, if a bank was doing it by itself, reaching a customer who is unbanked would mean go to Karamoja, set up a bank, educate these people. They have to come. They have to come to the bank, start saving with you, apply for a loan. Like the cost of that. If you had to divide it for each one particular customer that will actually come in, it's expensive. How sure are we they're going to pay back? What are they doing anyway? So those are things that Jumo actually concentrates on. So we deal with that particular problem and say, okay, these are the customers that are unbanked. The bank wants to reach them. They do not have the capacity or the resource. They could be there, but it's crazy expensive. So what we do, we look at that and push for that. So we are able to connect the partners and our customers from wherever they are. You don't have to walk into a bank to get this. So that's how the partnerships work with banks, and with the technology that we have, we push for that, which definitely adds value to all partners in the ecosystem.
Okay. I can see that your product clearly it promotes financial inclusion, which is important because our informal sector feeds a lot of people, and a lot of people are employed in it. Yeah. So it's important. I think your kind of fintech is quite impactful. Yeah. So, and I mentioned earlier that you're in Uganda, you're in Kenya, you're in Tanzania, Zambia, and Ghana. Are you thinking of expanding into other markets?
Yes, there's definitely work in progress. We are already looking at Benin, Cote d'Ivoire, and Nigeria.
Okay, that's a whole West African bloc.
Yes,
almost.
Yes, we're looking at West Africa, and that's currently what we're working on now. Yeah, and of course bringing out more products in the countries that were already existing, because things change and we need to make use of the technology that exists.
True. Yeah. And then the bit is how has COVID impacted your business model?
I think I wouldn't say we've been hit, because most of the products that we provide are already not, we don't have to face our customer, they don't have to go anywhere, they're quick, they're easy, they're accessible just on the phone. And of course, but we've been able to see an impact on our customer side with, let's say, delays in repayment because people have lost their jobs. People are just not able to afford what they were affording before. And what we have done, like I mentioned earlier, we're a very customer-centric company. We, at that point when COVID, the pandemic just started, we decided to try to understand what the problem, or with repayment, where that problem was coming from. And immediately we rolled out surveys, heard from our customers, collected insights, and most of the feedback from our customers was around, I'm not able to repay, not because I can't, it's just that, not because I don't want to, it's just that I don't have money, I need to feed my children, I'm not working. And I mean, if you to prioritize, feed children, pay for a loan.
Yeah, I'll feed my children.
Exactly, and some are like, they've been very good customers, and they're saying, how can I be able to, I don't want to get a penalty fee, because they understand how the model works. Like if I delay, I get a penalty fee, but even if it's just a penalty fee, like if I delay to pay, it might affect my next loan. So we've done a lot of education around that, and we're getting this feedback where customers are like, help us. We didn't want this, and we were understanding, and immediately we acted on all our different portfolios and just extended for WEWOLE, we extended the term from 7, 14, 30 to 30 and 60 to give them more time to repay, encourage them to pay in bits.
So paying back in 30 days or 60 days, yes, instead of the 7 days?
Instead of the few days. Okay. But also telling them, even if you took out a loan for 20,000 or 50,000, even if you have 5K, if you have 2,000 shillings, pay back in bits. It helps, and we also waive the penalty fee. So from the time the lockdown in Uganda was announced and in all other territories, we took off the penalty fees.
Okay, yeah. That's really nice of you.
Thank you. Okay. So that helped us. Yes. That really helped us keep our collection rates up.
So your collection rates haven't been significantly affected even in the pandemic, because of course you were you responded to the customers' needs.
They've been impacted in a way because the terms have extended. So if we took out a loan at a point and you took out a loan for 14 days, we had to change in the system and go like, it's okay to pay back in 60
days. Okay.
So that impact of it delays, but then people actually pay back because they appreciate these products. The stories we've had are incredible. People have started businesses. People have taken children to school. People have paid for emergencies, and life-changing stories. So, yeah.
Wendy, thank you so much for speaking to me. I'm going to give you some last words. It's been enlightening to know more about Jumo.
Thank you.
What would be your takeaway, your last words?
I think my takeaway would be we need to maximize do what the customer needs, understand our customers, and encourage inclusion as opposed to a short-term benefit. So for any fintechs, let's say, we need to be able to consider the customer for the longest time possible, have people included in the system before we start thinking about, let's say, money and stuff like that, because then it really helps you design something that is really good for the customer.
All right.
Yeah.
Thank you so much, Wendy. Ladies and gentlemen, there you've had it from Wendy, who works with Jumo. Jumo being a financial technology company, the largest financial technology company in the African continent that you don't know about, but you will through their services very soon. Thank you.